Bang! We are back with another banger today. I've recorded this video 2 times, and the first time I wasn't even recording, and the second time my mic was muted. That's pretty awkward. But anyways, we need to get into how to trade high impact news with the PRR strategy. And most people, I've had some questions. I've had people ask me like, how do you trade? Like, do you trade on high impact news days? And I'm like, of course, I love high impact news days because for some reason there's a stigma that people, I think that's the word, stigma. People think that like you're not supposed to trade on high impact news days. Dude, I don't care. Like, I will say I don't take trades a lot of the time on NFP, but I still go into the market and try to like see if there's opportunity. Okay, but what I will say is that most of the time I take trades on CPI day. Okay, now let me tell you why. What does CPI do? Look at this candle on my screen here. This is the CPI candle of this month and for February. And look, it's forming a massive imbalance, a massive FVG. But the thing is, you have to think like, what do we know about FVGs? Price is likely to draw back into them. Okay. Now think about that for a second. Name one time that you've seen a CPI release where price hasn't drawn back into that gap. Think about that for a second. Name one time. Exactly. You probably can't name a time where price didn't draw into somewhere into this gap. Okay? Now, that gives us perfect opportunities. So, real quick, now let's get into like what the point of high impact news is. Okay? We could have the most bullish economic news on CPI day get released, and it could literally just it could be so beneficial to your consumers, and it could be so just beneficial to the economy as a whole, and the market will tank. Why is that? Because the whole point of this is to be manipulated, so manipulative, and to seek out liquidity, take liquidity, generate liquidity, whatever you want to call it. Okay. Now, real quick, let's go in and kind of dive deeper into that. So look at what price does with that candle. Now, for those who know what SMT is, smart money traps or smart money technique, whatever you want to call it, I did check. The CPI candle on ES took out this short-term high. Okay, there was an SMT at the highs basically, but when you look, like, they're basically equal highs. They're off by like a tick. They're literally off by like a tick. Now here's the thing. The market, when it opened that CPI candle, think of what it did. Because, we can look at a candlestick and tell the story of what happened. Okay? We formed this high here. Okay? We formed the high and then dumped. Okay? Price basically ran up last second, like right, right as that candle opened, we ran up, took liquidity and dumped. Okay? Now we have to think like, okay, where's resting liquidity going to be placed at? Okay? Resting liquidity is going to be placed at these prominent lows, okay? Let's look on the chart for prominent lows. We have some here. Then we have some more here. We have some here. Okay. If you want better accuracy and better readings, if you're going for a point like this where there's, like, look, we can mark out the wick here. We can mark out the wick here, but then we're kind of going into this point where this is like the lowest point relative to our screen, our charts at the moment. You can mark out the bottom of the body of the candle, or, I mean, it doesn't matter in this case because we go even farther, but for extra safety, you can do that. We keep going back. And then we can mark out right here. Let's go for these kind of like stacked wicks right here. Okay, and then I guess you could go for that last wick down there. Okay. The reason I'm not going for this crazy wick down here is because here's what we know about CPI. We know it's not going to drop the market 500 points. It might go a couple hundred, like in this case, I believe it was 220 points. And I know that. I don't know why I acted like I'm guessing because I've recorded this video like 50 times. Yeah. So on the 1 minute, it's like 225, but right now we're on the 5 minutes, so it's like 250. Okay, but look at what the market's doing. The market is basically taking out liquidity. And when you see conditions like this where we have just dumped like crazy, it's very highly unlikely that price isn't going to rebalance higher. Okay, price is going to rebalance higher. Think about that. Like, You think like we're just gonna keep like just dumping and just like never recover? We have to rebalance. That's the thing. The market is going to rebalance price at times. This is a perfect opportunity. Now here's the thing. You might be thinking, okay, what does this have to do with the PRR strategy? What do we know about the PRR strategy? We need to have a sweep of external range liquidity. Okay. Now, look right here. CPI already did that for us. Just because it's a red folder news event, that doesn't like invalidate PRR. It's like its contents at all. It just did, it did the work for us. Okay, it did it a lot faster. Okay. Now here's the thing. Most of you guys are probably thinking, what are you gonna do? Inverse? Are you gonna wait for a close above this massive gap and then take a long? No, why would I do that? It's stupid. Because look, if you were to do that, like if we go to our long position tool, should be here, yeah. Like, look, what's your stop loss is gonna be under the gap at like 226 points. If you use one micro, you lose over $450. That is absolutely crazy. Why would you do that? Okay, so here's the thing. We're gonna look for opportunities to trade inside of the gap, okay, and to fill the gap. No diddy. So let's pay attention here. Let's scale down to the lower time frame because right now I'm on the 5 minute. Okay, look what price is doing, providing us a little FEG. What do I teach you guys? That there's going to be price is going to leave behind internal liquidity, which is in the form of FEGs. So look, we left behind one on the way down to sweep liquidity. That wasn't this one. I mean, there is a gap here, but this was more important because we don't want to be paying attention to this gap just yet. Okay. We can now use this as a possible opportunity to, inverse it and take longs. Okay. Let's just play out the candles. Notice how we didn't get a close above. We almost did, but we didn't get a close above. So we wouldn't have taken a trade yet. Okay, look what price is doing. Price right now, let's go to our drawing tool. Price right here is taking out these, short-term lows. Okay, let's keep watching. Technically, we did form an imbalance right here. Let's scale up to the 2 minute time frame. And now we'd be looking at this. Okay. Okay. All right. That's decent. Look what we leave behind. We're leaving behind another FEG. Now, here's a pro tip for you guys. Draw out your IFEGs far to the right. Okay. Now, the reason I wouldn't take a trade just yet, even though this might hit, I wouldn't take a trade yet is because we have this one above us. So I'd ideally like to see this one get inversed. Okay, so see how it worked, but now we've inversed this gap. Okay, so what you could do is you could enter a long at the close right here. You can do that. But here's what we want to do. Keep in mind, we have these like wicks right here that we want to see taken, which we do see taken now. Now, the next course of action is that I'm going to measure out the 50% level of this imbalance. Okay. Now, what I want to see is price ideally make a rejection around 50% because here's what we need. If we are bullish biased, if our higher time frame, bias is going to be above us, so bullish, we need to see a bearish FEG get formed. Okay. So I want to see ideally price reject under or at 50% because, think about it, premium and discount array, so a PD array. You want to be buying in the discount and shorting in the premium. Okay, so we want to see a rejection. You're likely to, okay, look right here. Boom. Let's scale up. Remember, we want to scale up on the time frame, see if we can make sure we're trying to get it at the whatchamacallit. Sorry, I'm blanking right now in my head. You want to have the FEG on the highest time frame. Notice, remember what I just said about drawing out your IFEGs to the right? Look at that. Boom. Now you have a support level right here. Look what we're doing. Let's scale up. I believe we have a 5 minute FEG. Yeah, look at that. Okay. Boom, shakalaka. Okay, here's what you can do. Right now, okay, you could enter at, like, if you go to the 4 minute, if you really wanted, you could enter off of that because, like, this setup, like, even though it did close above, it did it barely. It was so slight. You could enter right there if you wanted to. But remember what I keep saying. Draw out your IFEGs to the right. Price is likely, price needs to rebalance. And a lot of the times when price inverses a previous FEG, it's going to create one itself. So look how we created another one right here. Okay. So let's just wait. We'll probably get price rebalancing. Boom. That's where you want to buy in. Okay. I'm using kind of crazy size here. And keep in mind, like, look at this range. We're trading in a 200-point range. You want to be using less size than 5 micros, honestly. Well, what would you do here? Obviously, I don't know. I probably shouldn't put 5. I'd go with, like, let's just say we use 2. Okay. Buy in here, put our stop loss low. Okay. And then you would be targeting the top of the imbalance. And listen, we would want to be setting limit orders. Basically, if you're looking for that pullback, we're looking for, to put limit orders at the top of the IFEG. And also at 50%, by the way, I probably should have mentioned that. So you would also have like another one get filled here. But now look at what price is doing. Bang, just like that. So basically all you're doing here is you're identifying opportunities of, using bearish FEGs as basically as like support levels and waiting for price to either inverse them or to rebalance. Okay, so like right here, inversion. Okay, let's just draw this out to keep it simple. Look at this. We had inversion, price runs up, rebalances, price inverses, price runs up, rebalances. So price is constantly inversing and rebalancing, okay? So, and even if you were to take a trade off of the first inversion that you saw, right here, dude, that trade would have cooked 200 something points. That's exactly how you'd want to be trading the PRR strategy on days like CPI, NFP, that kind of deal. Because like, look at all the opportunities here. You had 1 opportunity, 2 opportunity, 3 opportunity, 4 opportunity. 4 whole opportunities to trade in one direction. So the thing is, you want to be making sure that you are, obviously you're trading in the right bias. You don't want to be shorting here. Like look how this gap right here. Notice, let me just delete off some of these red circles here. Notice how with this gap, we inverse this right here to the downside. Why would I could be looking at this and I'd be like, oh, we had a inversion to the downside. I need to look for shorts. The reason I'm not looking for shorts, like, look, we haven't rebalanced to equilibrium of the gap, which is 50%, okay? We haven't hit that yet. Also, why would you be shorting in a discount? And then also, like, what the hell are your targets? You've already had a crazy move to the downside. You have to think on the higher time frame. Like, we're rebalancing higher to a higher imbalance, which is, this whole thing right here, okay? So there's multiple opportunities to trade with this. Think about this for a second. With PRR, you don't always have to trade like right after the sweep and then have like something down here. You can trade like in like you're in the higher time frame gap. Like you can trade inside of the gap. Okay, so there's plenty of opportunity that gets presented. The only thing, I mean, it might take a little while for your take profit to get hit. Because I mean, look at the 1 minute chart. Like it would have taken what, like 2 hours for take profit to get hit. But the thing is, like, what do you expect price to run up 200 points in like 20 minutes? So you'd have to be patient with it. One thing I like to preach is set and forget. So I just set my orders and then like I'd do something else. Okay, so that is how you guys would be trading PRR strategy on days like CPI, that kind of deal. So let me know if you guys have any questions in the comments. Keep in mind, guys, I have a completely free futures trading course. I teach you about everything needed to become profitable. I talk about prop firms. I talk about my strategy, daily bias, all that kind of stuff. So it has everything you need. And if you guys would like to trade live with me every single day, I live stream from in class at school. I live stream my laptop screen. I show all my executions, I show all my position sizing, everything. I show statements, whatever the hell. I show everything. Okay. No weird shit. So anyways, guys, I hope you guys enjoyed this video. Let me know if you guys have any more suggestions in the comment section. And yeah, I'll see you guys in the next video.